Hello traders, Smart Trader here. Welcome back to my YouTube channel. So in today's video, we're going to cover an interesting topic. We're going to talk about some reasons why traders miss their trade after monitoring their setups for hours or even days just to watch the market come close to the entry area, like in this example here, and see the market flee without them. So this can be really frustrating. So that's why I have decided to make a video today to give you a few reasons or few mistakes that you are making that leads to this kind of situation here. So without further ado, let's get started. But before diving into the video, let's talk about our upcoming trading program. I have made an update about it on my Discord and my Telegram channel. So this project is called the Smart Trader 2.0, and it is a project I've been working on with my team for almost 3 months now, and the project is at 98% completed. So here's what you need to know about this upcoming trading program. So this trading program is designed to build a bridge between the often overlooked fundamental analysis and the technical analysis. So that's why it's called from fundamental to technical. Okay, so here's what you need to know about this upcoming trading program. So it is divided into three parts. The first part, of course, is the fundamental part, and it consists of 5 modules. And in each modules, you have multiple lessons inside it, so making it a total of at least 15 lessons inside the part one. And we also have the technical part with 8 modules, and the last part is case studies and practical application. This is a more interactive part. So currently we are uploading the videos on our platform, and the registrations will open very soon. So stay tuned. If you are not yet subscribed to my Discord or my Telegram, make sure to subscribe it through the links that I will leave in the description box below so that you don't miss any of our upcoming updates about this trading program. So let's come back to our video now. All right, now we are back to our video, and we're going to talk about some reasons why traders miss their trade or setup after monitoring it for hours or even days, just like in this example here. So in this example, you can see that you have properly marked your structure here, and you have marked your area of interest. You were waiting for the market to come to this level here before planning for the sell here. But the problem is that the market came close to your area of interest and reversed without you, and the market keeps going down until your expected take profit level. So this can be really frustrating here. So first of all, let me zoom out to show you that the structure is clearly bearish here. Everything was respected. I just didn't want to make a complete structure mapping here, but I just wanted to use this structure here as an example. Okay, so the reasons why you are missing your trade, like in this example here, there are two of them. Okay, so the first one is the wrong identification of your area of interest. You have identified the wrong area, and secondly, you are using the wrong lower time frame confirmation. So these are the only two reasons why you are missing out your trade, just like in this example here. So in this example, let me use bar replay so that you can come back step by step to see how we could have avoided this miss out here. Okay, so first of all, in this structure here, we are trading in the internal structure. Since the main structure is bearish, so we're continuing with the internal structure, which is also a bearish here. So this is your breakout structure, and then this man taken, and the market drops down to take out to break this level to the downside. So this is your level of change of character. So after the market has shifted structure here, you look for sell opportunities. But first of all, you need to wait for the market to take out your investment, which is this one here. And now you have to target your area of interest, which is the first point where you can plan for the sell if the market mitigates it. Okay, so the problem is that you are targeting this level here. So this level here is your order block, but your order block is not part of your area of interest. The first thing that matters is your order flow, and your order flow is down below here. Okay, so if we use bar replay, you can actually see that the market has actually mitigated your order flow area. Okay, so your order block is like a refinement area. So if the market comes to mitigate it, then fine. But if the market doesn't come here, then you have to use your order flow. Okay, so the main thing here is your order flow, not your order block. So in this case, we are in a bearish structure, so your order flow is the last buying move before this drop here. Okay, so this is our last buying move before this drop. So this is our order flow. So in this case, this is the area we will be targeting at first. Okay, but if the market keeps moving upward and mitigate our order block, then fine, which is also good for us because we'll have a refinement here and we'll have a much smaller zone here. Okay, but here in this case, the market didn't mitigate our order block here. Okay, and the market has even given us an indication that it will not mitigate this order block here. So let me come back a little bit so that you can see it clearly. And this leads us to the second mistake that you are probably making, that make you miss out your setup, just like in this example. Okay, so you can clearly see here that the market has made a rejection here. Okay, so this is possibly a single candle order block, but since the next candle was not yet created, we need to wait for the next candle to be created and close below this candle that has swiped the previous candle liquidity. Okay, so at this moment this order flow was already mitigated, so we will need to wait for the market to create the next candle. And as you can see, the next candle has completely closed below this candle that has swiped liquidity, or has mitigated this order flow here. Okay, so this candle is our single candle order block. So if the market come to this level, then we can definitely plan for the sell here. So this is our single candle order block, and at this moment we will paint our sell limit at this level here. Okay, and our stop loss will be just above this structure here, and our target will be the next break of structure. Okay, so in this case, if this order block fail and the market keep moving upward like so, then fine, we can still use our order block here for another entry here. Wait for lower time frame confirmation, then you can also plan for the sell here. So as long as the market doesn't push up and completely close above this level here, then this setup is still valid. Okay, so this is the level where the market need to break and close above to invalidate this setup here. So as for now, the market has created this single kind of order block after mitigating this order flow. Then this is an indication or a confirmation for a sell. So all we need is to wait for the market to come back to mitigate this level, to mitigate our single kind of order block. Then we can definitely sell here. And as you can see, the market has come back to mitigate our single kind of order block, and just like that we have got this trade here. Okay, so if you were waiting for a market to mitigate this level here, then you would have probably missed out this beautiful opportunity here. So these are the two mistakes here. So let me come back. So now we have used the single kind of order block in the higher time frame to catch this trade. So what if you were using the lower time frame confirmation to catch this trade? Okay, so let me drop to our lower time frame to see what kind of lower time frame confirmation we can use to catch this trade here. So now let's say the market has mitigated this order flow, and now instead of directly looking in the higher time frame for confirmation, or like a single kind of order block, we drop to our lower time frame to look for confirmation. So I'm going to use the 2 minute time frame, since the 1 minute is sometimes gives a lot of fake moves. Okay, so here we have our order flow level, and the market has already mitigated. So we will need for the market to create a change of character in the lower time frame. So this is our last pullback before the market has mitigated our order flow. Okay, so we need for the market to break it like so. So when the market has broken it, we will plan for the sell now. So we will wait for the market to mitigate our level here, our order block in the lower time frame in the 2 minutes. Okay, so in this example here, we will not need an inducement before we can take our trade here, since the market has already collected liquidity in the higher time frame. Okay, so we will pen our sell limit at this level here. Okay, and then wait for the market to come to mitigate it. So let's see what happened here. So as you can see, the market didn't come to mitigate our lower time frame order block, which is up here. The market came close to this level here, but failed, and the market has dropped here. Okay, so what is the explanation of that? So first of all, this one is not at all a valid order block. Okay, because this black candle didn't succeed to take out the liquidity of this previous red candle here. So this is not a valid one. Even though the market has respected this level, this is definitely not a valid order block in the lower time frame. So we cannot use it as per the SMC rules. Okay, so our valid order block is the one high above here. Okay, so this in this example here with the lower time frame confirmation, we have missed the trade as well. So now you understand that it is very important to use the right area of interest in your higher time frame and use the right entry confirmation. So first of all, you have to identify your the correct area of interest, which is first of all the order flow. Okay, so when the market come to the order flow here, just stay in the higher time frame and wait for any single kind of order block confirmation. If the market gives you single kind of order block confirmation, then there is no need to drop to your lower time frame confirmation before taking a trade. Okay, or else you would miss the trade like we just saw in this example here. Okay, so this is the first thing here. Now the main difference between the single candle order block and the lower time frame confirmation is that with the single candle order block, you have a high win rate, but your risk reward ratio is reduced, okay, because your stop loss size will sometimes be too large here. But with the lower time frame confirmation, like in the 2 minute confirmation, you will have a higher risk reward ratio because you have made a refinement, and then your stop loss size is small here, so you will end up with a high risk reward ratio. But the problem is that your win rate will be low because the market, most of the time the market will not even trigger you. So yeah, this is the main difference between these two confirmations here. Okay, so this is the first example. Let's move to a next structure to see what kind of configuration can we have. Now the market has dropped and broken this level, so this is a break of structure. We have a completely new structure, so in this case we will wait for the market to take out an inducement, and this is exactly what the market has done here. The market has taken out this inducement, and now we need to identify our area of interest. So what is our first area of interest? So our first area of interest is our first order flow, which is this one here, and it is clean and mitigated. Okay, so if the market can mitigate this order flow and give us any higher time frame, like single kind of order block confirmation, then we can sell directly in the higher time frame and target the next breakout structure. But if the market doesn't give us any single kind of order block in the higher time frame, then in this case we can drop to the lower time frame to look for any additional lower time frame confirmation. Okay, and this is our order flow, and we can also mark our order block, which is the refinement of our order flow. Okay, so this is our order block, which is here, and there is no extreme order block here. Okay, this order flow is all already mitigated here, and these refinements are already mitigated, so we cannot use them as our order blocks. Okay, so in this example, the market has already mitigated this order flow, and let's see if the market will create any single kind of order block in the higher time frame so that we can directly take our trade in the higher time frame. And as you can see, the market is dropping without creating a single kind of order block. Okay, so the single kind of order block needs to swipe a liquidity. Okay, first the previous candle liquidity. So if this candle was a black candle that has pushed high to take out this liquidity, the liquidity of this black candle, then this will be possibly a single kind of order block. Depending on the next candle, if the next candle close below it, then it will definitely be a single kind of order block. But as you can see, even this first candle didn't succeed to take out any liquidity, and the next one didn't take out any liquidity either. So there is no single kind of order block confirmation in the higher time frame. So now we would need to drop to the lower time frame to see if we can possibly have a lower time frame confirmation. Okay, so in the lower time frame confirmation, we have an interesting configuration here. So there is a lower time frame confirmation here. This is our change of character level. So if the market break this level here, this will be a change of character. So let's see if the market has broken it. Definitely the market has broken this level in the lower time frame. So we would wait for the market to come to mitigate our order block in the lower time frame here, and then we can plan for the sell. Okay, so let's see what the market has done here. So in this example, we can no longer use this one here as our valid order block in the lower time frame, since the market has already broken this structure in the lower time frame. So in this case here, whenever the market will push high to come to this level, this will be a change of character in the lower time frame. So this is definitely not what we want. So this is a bullish breakout structure, but we are looking for a bearish change of character. Okay, so if the market pushes high to break this level, then this will be a bullish change of character. So it will be like a contradictory confirmation here. So better for you to escape this kind of setups here. So let's wait and see what the market will do. So now the market has completely reversed and pushed high. Since I told you, if the market broke this level here to the upside, it will be a bullish change of character, and the market has targeted our refinement, which is the order block here. So let's come back to our main time frame, which is the 15-minute time frame, and see what the market has done here. So the order flow has failed, and now the market has targeted the order block refinement up here, and you can see the market has mitigated the order block here and now is making a rejection here. So we can definitely not use the single candle order block in the 15-minute as our confirmation, since there is no valid single candle order block in the higher time frame. So we have to drop to the 2 minutes to look for another entry confirmation there. As you can see, there is absolutely no structure in this leg here, since the bullish momentum is too huge here. So there is no even need to waste your time to look for lower time frame confirmations. Okay, so let's come back in the main time frame and look for another structure. So we would just wait for the market to give us a new structure, and now the market has dropped to break this level. So the market has created a new structure here, and then we can start looking for ourselves. But this one here is not a valid inducement, since the black candle didn't take out the red candle high here. So this is not a valid pullback, so it is not a valid inducement. Okay, so this is our level of change of character, which is up here. So in this case, if there is no change of character, there's in this case, if there is no inducement in this leg, so what can we do in this case? So we will either wait for the market to drop and create a new structure with a new inducement like so. So in this case, our inducement will be here, and we will target another area of interest here, or wait for the market to push until the last lower high, the last valid lower high here, and then wait for the market to swipe the liquidity of this lower high, and then use the lower time frame confirmation or use the single kind of order block to take our trade. Okay, so let's see what the market will do here. Okay, as you can see, the market has pushed high, has broken, and closed above this last lower high here. So this is a change of character. So this is not a liquidity swipe. So if the market has swiped this liquidity, then we could possibly look for lower time for confirmation or use higher time from single kind of order block to take our sell here. Okay, so since the market has broken and closed above this level, so this is a change of character. The market has shifted from bearish to bullish now. So now we will start looking for buy opportunities. So in this leg, we will wait for the market to take out an inducement down below. So you have just you just have to wait for the market to take out your inducement and wait for the market to make a rejection, like exactly in this example here. So this is the first indication that the market can possibly create a single kind of order block. So it will depend on the next candle. If the next candle um, is a black candle that pushes high and closed above this candle, then this will be definitely a single kind of order block. But let's wait and see what the market has done here. So the next candle again has come down to collect this liquidity. So this is a double liquidity swipe here. Okay, a new liquidity swipe. So our single kind of order block is transferred from this red candle to this black candle here. Okay, so let's wait and see the next candle. We are looking for a candle closure. Okay, all right, so now we have our candle closure to the upside here. So this is our single candle order block. So if the market come down to mitigate this single candle order block, then we can definitely use this one here as a confirmation to take our buy here, and we would target our next break of structure, or depending on your minimum risk reward ratio. Okay, so if you have a minimum risk reward ratio of 1 to 2, then you have to target like so. Okay, and let's wait for the market to see if it will drop and trigger our buy limits. All right, as you can see, the market has come really close to this level here. It will depend on your broker and your spread. If you have placed your buy limit a little bit up here, then the market would have definitely triggered you here. Okay, so the market has put high and has broken this level here. So this is a new break of structure. All right, so this is exactly how you can use this example, like the single candle order block confirmation and the lower time frame confirmation, to not miss your trade. Okay, so imagine in this first example here, there was the first thing, you were targeting the wrong order block here. Okay, so this is why you have missed this trade here. So in this case, the right area of interest is your order flow, not your order block here. So if the market mitigate your order flow and give you any indication in the main time frame like single candle order block confirmation, then you can definitely take your sell here and not wait for the market to mitigate your order block above here. Okay, so the market has respected this one here and has dropped here. Okay, so in this second example, there was no confirmation Okay, so we couldn't have taken a trade here, and in this example there was no valid order block or order flow here, but we have used single candle order block to take this trade here. So the market has taken this inducement and has created a single candle order block here. Then we have somehow missed this trade, but it depends on your broker or how tightly you are placing your buy limits here. Okay, so this is definitely the reasons why you are missing your trade. So the first one is that you are targeting the wrong area of interest. The first one that you have to target is your order flow, and then you can make a refinement to your order block. So this is the first reason. And the second one, you have to understand in which condition you have to use your lower time frame confirmation. Don't directly drop to your lower time frame to look for confirmation for lower time frame confirmation, but stay in your higher time frame to look for single candle order block confirmation. If there is no higher time frame single candle confirmation, then you can at that moment drop to your lower time frame to look for lower time frame confirmations. Okay, so these are the two reasons here. I hope this video has helped you. It is taking too long, so I don't want this video to last too long here. There are a lot of things that I want to teach you here, but definitely we are going to discuss about all of these things in my upcoming trading program, the Smart Trader 2.0. So stay connected because I will give you more updates in the coming weeks. So thank you for watching till the end, and see you the next time.